Welcome to the Pump and Dump channel for another weekly update. This week going back to talking about oil and gas. So we had the high in November at 290 I think, and we've been going down ever since. It's gone as low as 183 on Martin Luther King Day. It was a similar situation as we had at Thanksgiving last year. The equity market was closed, traders were home having a holiday, and then the people who showed up for work just triggered all the stop losses by shorting and stole everybody's money. So yeah, on the other hand, what we saw here was it went down from 2 to 183 right on the open. It was like really fast, and then it went right back up. It went up to 193, and then the day after it was weaker, but it seems like we are stabilizing here, and I think that there is a possibility that we could go back up to $2, but there's also a possibility that we just continue going down. So that's why I've put this turquoise line. I could probably change it to something different. Don't know what color I should use. Let's try this purple. And that's kind of where it's at on the technical perspective. In terms of this down move, there was these two bear flags, these relief rallies that were attempts at reversing the trend, but it just went down again. I think in terms of the fundamentals, a lot of producers, they can't make money at $180, $190 per MCF. In terms of their all-in costs, the better ones are like at 175, but the weaker ones are in the $2 range, and they just can't make any money at these prices. So they're going to have to find other employment, I guess. The fact with oil is that I talked about this in my last video about oil and gas. When we had the Iran situation, I said that it was a very likely scenario that we would pull back, something similar to what happened with the Saudi Aramco news. It just, and it did kind of crater. That was kind of one of the possibilities I outlined. Of course, I was secretly thinking and hoping we would maybe come down back to the 60s, and we would come back onto this trend line and keep going up, but we didn't. We came down to it, we had a bear flag, and then we sliced right through it. So that's kind of where it's at. We've gone up here on the Fibonacci retracement. We've come back down to this lower level here, and at the same time, this trend line that I've had in for quite some time and is finally getting some meaning, is going to show some support here, I think. So I think that there's a good case to be made that the oil price could bounce back up to like 56.50. 58 might be a stretch, but 56.50 I think has a high probability, given the fact that we have these two support lines. We have an oversold condition on the RSI. With natural gas, we also have this oversold condition right here. So that's kind of how I'm thinking of it right now, is I think we have a rebound next week in oil and gas. For Range Resources, we've been between $3.30 and $5 per share for the last 6 months. This is mainly attributable to the fact that the oil and gas prices have moved in ways that moved the valuation of the stock this way, and then there of course have been some phases where the price just decoupled from the intrinsic value, but eventually it came back down. And in January here we had some news flow from the company, which was important, which stabilized the company's downside, and that is the reason why we have come down to 330 and we haven't gone to 250 or lower. So the news flow is they've tended to repurchase some of their outstanding notes for 2021 and 2022, and we have them also issuing another note for 550 million. That is 9.5% interest, due 2026. And then we have the dividend has been cut, And the capital budget here, this is has been reduced to half a billion from 3/4 of a billion 2019. So they are kind of cutting back. They're doing what they should be doing in a bear market. They're, just shrinking to maintain their balance sheet so that they don't have to go into bankruptcy, and they don't, overproduce too much. And I think their guidance is to maintain production flat for 2020 as they had in 2019. The reserve update is also important. They replenished their reserves to 18 trillion cubic feet, and at the same time they also sold half a billion cubic feet equivalent of natural gas, and because it's cubic feet equivalent, so we don't know if it was oil or gas that they sold, and we don't know what the price is, and that is something that's very important because they basically have managed to maintain their reserve, and at the same time they have sold some reserve that they had, and we don't know the price. So that is an unknown that is potentially could be 50 million, could be 200 million. I really can't tell. I mean, I'm just guessing. It might just be 10 million. Who knows? Might be like really weak acreage that nobody wants, and they sold it for pennies. Then don't remember where it was, but they also talked about the hedges they put on for this year. They hedged about 60% of their natural gas at 264, and they did that in January when the natural gas prices were higher, and they also hedged some oil and natural gas liquids at higher prices than we have right now. So yeah, that is kind of where it's at. I think we are going to see a situation as we saw with CNX Resources in Q2 2019, where the share price is low, or is not necessarily low going into the earnings release, and then we see a big move up. That could be a result of all this news flow here that is not necessarily all priced in at this price here. Getting to CNX Resources, I think in December here when we had this this bear flag here, the intrinsic value was falling, but the price was rising, and there was a decoupling, and it's still decoupled. I think the intrinsic value at current prices for oil and gas is like in the $4.50 to $5 range, but it's obviously trading at 676. We're going into earnings, into the earnings, which will be strong because we already know that they hedged almost all of their production for Q4 2019. It will be similar to what they achieved in Q3 2019, but the outlook will be weak because the natural gas price is weak, and they've already hedged next year and the year after a lot of their production, and that is like a one-off trick. You can't re-hedge what you've already hedged and create value that way. Range Resources is just starting to do that by hedging its some of its production. That improves the valuation of the company and the shares. And therefore, I think that even if oil and gas rebound and CNX Resources rebounds a bit, it would ultimately fade away and come back down to the intrinsic value, which would of course rise, and then they would kind of meet somewhere, probably who knows, maybe $6 again, who knows. But yeah, we'll see a Q4 2019 be reported on the 30th, which is only 5 days away, and we'll go from there. Antero Resources, yeah, there's not much to say about this company. This is trash. At the August low for natural gas, it was at 465. At the September high in natural gas, it was only 430. So it went down, and its relief rally was, it was weak. The high was lower than the previous high, and then of course it went down again. And at the November high, which we remember is much higher than the September high, this stock here was, even lower than it was in September. And then it went down, and then during this this relief rally here, it went from $2 to $3 a share, which was absolutely incredible. But now it's back down at 191, and I think the outcome in case of an increase in oil and gas prices for Range Resources would mean the stock would bounce off of this support line here, and CNX Resources, who knows, it might go up a bit and it would fade down. But Antero Resources, I am 100% convinced that if oil and gas goes up, it might have a little, it might gap up, but then it would sell off and go into the toilet. And ultimately what it comes down to is that Antero Resources, their reserve is valueless at current prices, and they just can't make any money from their reserves. And if we just look at the financials here, we can see in the cash flow, yeah, Q3, 200 million in revenues, they spent 300 million, and the same is for Q2. I mean, in Q3 2019 they actually were cash flow positive if you look at it this way, but overall we can see that the cash flow is weak. And if we look at the balance sheet, we can see here that the current assets are very low. They have, of course, this 729 million includes their shares in Antero Midstream, which I think they sold most of them back to Antero Midstream. They're monetizing their assets or liquidating their assets in hopes of being able to survive until the market turns. But the market won't turn with them. The market will turn after they fail. So yeah, they had low cash, receivables were weak. Then their property is, they record it as 16 billion in valuation, but that's based upon much higher oil and gas prices. So yeah, then you have to see down here that they have the liabilities, 7 billion in liabilities. And ultimately what it just comes down to is this company is failing. It's failing really bad. So yeah, I think that's going to do it for this week. Just one more point. The reason why they're monetizing their assets and selling their shares in Antero Midstream is because nobody's going to lend money to them. A sign of weakness. Antero Midstream is on the same path. Their main client is Antero Resources, and if they go out of business, then what are these pipelines good for? So yeah, that's basically where it is at for this week. I'm going to leave it at that. Remember, this is not financial advice or recommendations for you to do anything in these stocks. And yeah, as usual, you can leave your comments, questions, and opinions in the comments section. If you like the content, don't forget to subscribe, and have a good day.